we are back to talk about direct method of allocation. So we are using this method of allocation to spread support department costs over to the production departments, right? So this first method is called direct. So like it sounds, we just take the support department costs and directly allocate them to the production departments. We don't assume the support departments use each other's services, even though they probably do, right? I mean, you know, if you have accounting as one of your support departments, well, they probably get some copies made if, you know, photocopying is a support department. So, but we're just going to ignore that. We're going to say, well, it's not, the amount that they use is not material or something like that. So we're just going to directly allocate to the production departments, plus eventually it all goes to production departments anyway, so we're just not going to even worry about what the support departments use of each other's. Okay, so here's what we're talking about. Here's our example. We've got two departments that are production, grinding and assembly. So we want all the costs to end up there, right? But we've got these support departments, power and maintenance. Right? So there's some costs associated with power, there's some costs associated with maintenance, grinding uses some of each, assembly uses some of each. Alright? So how do we do this? Well, we basically are going to figure out how much of each grinding uses and how much assembly uses and put the costs from each of those into grinding and into assembly based proportionally on how much they use. So if grinding, you think of total power as being 100% of the power costs, and grinding uses 20% and assembly uses 80%, you're going to give 20% of those costs to grinding and 80% to assembly. And same thing with maintenance. Let's say they use them 50-50, well, you'll just split it up 50-50. So basically the direct method, simplest by far, you just figure out how much of each one uses proportionally, based on something like kilowatt hours, maintenance hours, something like that, machine hours, and you spread that across them. Alright. Now, I think that the easiest way to think about this is to go look at me working the problem 7.35, because I do all three methods. So when we're done with our allocating, there's no costs left in power and maintenance, and all the costs are in grinding and assembly. Alright, so there's another method of allocating support departments. It is called sequential. Alright, and like the word implies, it's in sequence. So what we do is we say, they interact, so some of the support departments use each other's services, right? It's very easy to imagine human resources and accounting and photocopying, right? Well, they all use each other, right? There's some personnel who work in accounting and who work in photocopying, so they need human resources. Human resources needs accounting and they need photocopies, right? So it's easy to see that there's this interaction among the support departments that is separate from our production of assembly and grinding. So it may not be as much as what our actual production departments use, but they use each other's services. So these support departments, what we do is we pick a sequence. All right, because we have to allocate this proportionally. So, but we're not going to give all the departments, right? So we're going to say, you're the biggest department maybe, or you do the most volume or something, so we're going to split your costs among, so let's say accounting is the biggest department of the support departments. And we've got human resources and copying, and then grinding and assembly. So sequentially what we do is we say, okay, okay, accounting, we're going to split your cost proportionally across the other four. We're going to pick you first. We're going to pick accounting first. So we're going to say accounting, you're going to get split proportionally across human resources, photocopying, grinding, and assembly. Okay, so now you've got 0 costs left to allocate. Then some of those costs went into human resources, and now human resources costs need to get spread out. They do include some costs that came from accounting, so then you spread those proportionally, and so on until you spread all the support departments across all the departments. And we call that the sequential method. All right, so you can imagine you've got power and maintenance, production, grinding, and assembly. And what we do is you're going to pour power into maintenance, grinding, and assembly proportionally, right? Then you pour maintenance into grinding and assembly. And then you've emptied out power and maintenance, and you've got all your costs in grinding and assembly. And we call that the sequential method. And it does recognize that support departments use each other's support, and it does still end up with all the costs in the production departments. So total cost equals direct cost plus allocated costs, right? And we have to get those spread across the pressure. Now, we don't have any slides on reciprocal method, but I'm going to work a problem like reciprocal method, and I want you to understand a little bit about what it is. And it's, I guess I would say, the most realistic of the methods. It's a little more difficult to do, but basically when you have support departments, you give them to each other back and forth until they're proportionally, and that way all the departments get some of the costs, even the support departments. But it does take a little work. All right, so once you've allocated all the support service costs, you go ahead and divide it by the measure of activity, and that lets you assign the overheads. All right. We're going to stop here because I want to talk about joint production processes next. So allocating support, we're done. There's 3 methods: direct, sequential, and reciprocal. Go look at problem 7.35 where I work all 3, and I think it'll be pretty clear what I'm talking about if you go watch me work that problem. And the next video we'll be talking about joint processes.